let's look at the chart and see if now is a good time to buy from our opinion. And then we'll go over finding a yield farming strategy so you can accumulate it passively. So you can make money on the platform or you can accumulate the token. We're going to give you guys everything and then you can decide. Like I always say, I like to start on the monthly. Now, this is a relatively new protocol, so the technical analysis doesn't matter as much, but you can see everything quantified on a chart, and it's been a while, you know. So the weekly still kind of looks the same. We had it released and then it dropped, and now it's kind of surging back upwards. I bought here and here, and now if we look at the daily, you can kind of get a better picture. So this has been like a strong support level here, and we kind of just blasted through it. So
that was a good buy for you.
Yeah, I'm up like, let me see. I'll just go into the middle of these. So up on average, I took a little profit. I'm up 50% on average. That's pretty good for a bear market. And it's my second largest altcoin holding behind Radix. So yeah, we did pretty good on this one. We're doing pretty good on this one. So to be honest, I'm just DCNA into this because like I said, this could easily be a $15 billion market cap. My time preference is long. You know, I'm not a day trader or anything like that. I wouldn't be surprised if we kind of saw this come back down, retest this as support before we going back up. Again, this is the daily, so it will look more like one candle, red, green, in a perfect world. So now, in regards to yield farming, you always want to have risk management at play. Like, are you better off holding ETH? Are you better off holding Bitcoin? Because this is a new protocol. They did get 6 smart contract audits, but you know, all those motherfuckers could have missed something. It happened with Curve. They had their Viper hack, and Curve had hella audits. And they've been around for a long time and been battle tested. And there's a lot of flaws on the EVM, with the Ethereum virtual machine. So I wouldn't be surprised if there is something under there, but you never know. I hope not, because I own some of this shit too. So Ethereum is more battle tested. It has a higher TVL. Shit, this is built on top of Ethereum. So while there is a higher asymmetric investment opportunity for Pendle to outperform ETH, is it good to hold ETH right now over Pendle or Bitcoin right now over Pendle? Because Bitcoin is probably going to do a 6x in this market. And in order to look at that, you do ratios. So we look at Pendle versus Bitcoin. So as you can see here, Pendle's first. So if the chart's going up, that means Pendle's outperforming Bitcoin and vice versa on the way down. So Bitcoin, once it released, it outperformed Bitcoin for the past few weeks. For a few weeks, Bitcoin was outperforming it. But ever since pretty much August of this year, Pendle Finance has outperformed Bitcoin by peak to trough, 53%. Right now, 42%. So right now, you're better off holding Bitcoin over Pendle, at least for the near future. And if we go to the daily, we can see that price has been inside this strong channel. So it hasn't been a bad idea to, once it get to the top of this, to maybe take profits into Bitcoin, into Pendle, and then it gets outperformed by 17%. So right now we're kind of in the middle of this channel, but it's still going upward. So let's look at it compared to ETH. If we look at it compared to ETH, same exact thing. It's actually been outperforming ETH way more than it's been outperforming Bitcoin. So if we start here on the weekly, it's been outperforming. I don't know how this chart only goes back to March of 2023. So from peak to trough, Pendle outperformed ETH by 642%. And right now, 437%. Now, when it comes to yield farming, you might be asking yourself, well, do I want to pair it with Pendle and USDC or Pendle and ETH or Pendle and Bitcoin? It's not all about like, oh, what do I want to take profits in? Because it might not be a good pool for that. So like if we go on here, basically without doing all the saving you guys the time, because this video is already getting pretty long, the best liquidity you're going to get is through Pendle and ETH pools, not Pendle Bitcoin, not Pendle USDC. Like, and as you can see here, we're on ETH mainnet. There isn't even any Pendle USDC pools. They're all Pendle ETH or RNG Pendle. I'm not sure where RNG is. So one more thing, if you go on to CoinGecko and you type in Pendle, you can see what networks the Pendle token exists on, right? So you click this thing here, you see it's on BNB, Arbitrum, Avalanche, and Optimism. So you want to find like where's the best place to farm. So on ETH, right here, it gives you the total TVL when you add up all these pools. So on ETH, you have a TVL of 3.47 million with a volume of 448K. So remember that. If you go to Polygon and type in Pendle, nothing. If you go to BNB, type in Pendle, nothing. No one created a pool on BNB. If you want to do that, you can. You're essentially creating a market for people to trade there, but it's not guaranteed that they'll use it. Because if it's just you in the pool, it's probably going to be higher slippage. So let's go to where the most liquidity is, Arbitrum. So if you go on Arbitrum and you type in Pendle, remember on ETH, it was like 3.4 million with like 448K in volume. Now you might be thinking like, oh, the TVL is higher on ETH, so I probably want to provide liquidity on ETH. Well, no, you want to look at what's called the volume to TVL ratio. The higher the volume and the lower the TVL, the better. So this is actually better because while the TVL is lower at 2.2 million versus 3.4, the volume is higher. So for the less amount of liquidity that's in there, everyone's splitting a larger end of the pie. Okay, so if Pendle ETH is the best pool from a volume to TVL ratio perspective, I just put in a range here. I'm going to show you guys how you can predict or extrapolate what your yield might be. So if I go here, like it's been inside of this range for pretty much since June. It's been up and down. This is a pretty wide range. Sometimes I'll set up a wide one and then set up another one that's like more narrow. So from like here to here, and then another one that's really, really tight and rebalance that one frequently. That's if you really want to get risky. But with this price action and how it's been, I mostly have a wider range because I'm just using it as a take profit strategy. So when it gets to the end of my range, I'm taking profits. But let's say you want to provide liquidity for this level here, the 0.00032058, and this one here. Now you go to builder metrics. I did a video on this where I interviewed the founder. Feel free to check that out. But you input your numbers here. So minimum is this number here, and the maximum is this number here. So for the past for the past 60 days, had you provided liquidity within that wide range, you could have been getting 25.3% APR. And since it's been booming for the last couple of days or the past few weeks, so the past 30 days, you could have been getting 30%. And this is a pretty wide range, and it gives you all the data here. This line is where price is right now. This is like what I call the liquidity mountain, and these are my ranges here. So the tighter your range is, the higher the APR. And a lot of times, like I don't want to take profits into USDC. I want to take profits into ETH. So you can literally just use this as a take profit strategy and get paid passive income to sit in your limit order versus just holding the pendle and saying, hey, sell it when it gets to this price range. You can use a protocol like Pendle Finance, which I did a video on, where you can say, hey, once it hit this price, get me out of the pool, or once it hits this time, get me out of the pool. And it's one more metric that you can choose to get you out of the pool. But yeah, this is a way to accumulate it passively and take profits. And if you're thinking like, oh, let's just say you have a lot of Pendle and you want to take a lot of profits, this is all you do. You say, hey, when it gets here, take some out. When it gets here, take this amount out. When it gets here, take this amount out. So now when you're caught up in the craziness of the bull market, you don't have to think about it. You don't even need to be near your computer. You don't have to worry about if it goes up and nicks it and comes back down. You have these different tranches set up to where once it hits here, you're in 100% ETH. Once it hits here, you're in 100% ETH. And you don't do them from here to here, here to here, here to here. You make it from here to here. So then you will be holding 100% Pendle, 100% Pendle, or you're providing liquidity in 100% Pendle from here to here, providing liquidity in 100% Pendle from here to here. And as it goes from here and it's going up, not only are you generating fees, but the smart contract is buying ETH for you. And once it nicks your range, you're going to be in 100% ETH plus fees. You just got paid to sit in a limit order. And it's great.
Oh, man.